Hey, Wade with Trade ATS here. Welcome to Monday again. So this is our weekly video where we go over interesting looking Forex pairs that we're looking to trade in-house, and we're gonna share those insights with you. That being said, I got two different pairs for you this week, so let's get right into it. All right, so our first pair is Euro Aussie. I got my 30-minute chart here, and I got my weekly over here. And one thing I wanna quickly look at is the direction of the weekly. You can see that we have a fresh candle that may be turning right here. Now I'm trying to project where prices are going to be by Friday. So if I see what could be a clean, fresh rotation, I'm definitely going to want to take note of that. So that's all. I'm not going to overcomplicate it. Just simply looking at the rotation. This is obviously still in a long trend, but if this is rotating, that could mean that maybe the next week or two, we could get a little correction, and that'll be the direction, the biggest direction over the course of the days that you'd be trading. So definitely want to take note of that. If we jump over to the daily, you're going to notice that we got a brand new line here. This is a brand new ATS trend indicator. This is basically designed to show us directional bias and make it basically idiot proof. If we're trading above the line, our directional bias is long. If we're trading below the line, our directional bias is short. It's insanely accurate. We're really excited about this indicator. But since we looked at the weekly chart and we saw that we were getting a fresh rotation, you can see that it's already started obviously on the daily. So we're trading below this line. So when I pulled up this chart, one thing that was noteworthy to me was that these daily wicks traded up through that level right there. And we also have a bearish institutional level. You can see that those wicks filled that space back there. So that is really noteworthy. When you get a rejection off those key levels, that could be a precursor to another bigger push to the downside. Doesn't have to happen. Obviously, there's probabilities at play here, but I like that clue, and that will also serve as a good management point, because if this level doesn't hold, then likely the idea will fall apart at that level and it'll continue to go long. So at the end of the day, we can't predict. We have a good educated guess of where markets are going to go, but at the end of the day, we just got to get in and monitor risk. So that's a great level. Where I think the daily could likely go is down to this level here. I don't know if it'd be over the course of this week, but maybe over the next few weeks, it could get down to this level if it really takes off. So that would be my general overall projection of the trend. We have a bullish institutional level. There's liquidity here. A lot of long beliefs were born as this market broke out here, and this is going to be one of their pain points. So the idea that the market would trade back into that level is not too far-fetched in my opinion. So that being said, we're still working up here. So how would we trade that on the 30-minute? Well, we need to find some clear framework. As of right now, there are two predominant levels that I'd be looking for entry, and then a few other levels here for risk management. The most predominant level that we're looking at is this master pattern origination point. You can see we have a box right here. We got an expansion line or a value line right here on this candle. So if I'm looking to only trade short, that means that I only want to sell above value. If the market's declining, then I want to take advantage of prices that are overvalued in a declining market overall. So these are when that market became overvalued, right here and right here. Those are great places to enter. But as of right now, we're trading below that. Now, it's okay if you did want to start building position, not telling you what to do, you got to make your own choices, because if you did start building a position right now, I would start very small because we are still above this value point down here. This is the other benchmark price. So if this is going to continue short, we are for certain going to trade to this point right here and ideally get through it into a nice big move. But right now you can see that there is, from where we are to down here, there is about 48 pips. So that's a good place to start. However, I do think there's still a possibility that we will trade above this line again. And I would prefer to start the position sequence up above this level, because it's just going to be better entry. So we'll have to wait and see what happens, but this price you're definitely going to want to take note of. This is 1.68431 roughly, and you're going to want to take note of this price right here, which is 1.67669. So those are going to be your two benchmark prices for entry and progress in the trade. Now we go back here, you can see that these two previous levels of framework have held kind of as a resistance ceiling here. So we definitely want to take note of that. I would not like to see price trade too aggressively through these levels. I think that if we do push up, we can take out liquidity up here, I think worst case scenario, but I really would not want to see price established too much above this level. And we'll look at our crosshairs here. If you see where this liquidity line is positioned over to where the ATS trend is on the daily, if you look over at that chart there, you can see that if we do get to this liquidity line level, we're going to be trading above that daily rejection over on the left that we're kind of looking at as a clue. If we basically trade above that, then that clue would not be as valid anymore. And so again, I would like to see price not go much more above this, and then you basically whiplash right back down into this range. And then by the end of the week, I'd like to see it trade through this level down here. And at that point, you'd be significantly in the profit, and you'd have a lot of choices at that point. So that would be it. We also have a order block projection here. Definitely in trend. I don't want to see that you're taking out these order block projections too heavily. So between these two levels right here, that's where I'd be careful. If you have one or two positions in, maybe look to close them and reevaluate. But that being said, as long as we stay under those levels, I think could be a home run to the downside. So let's go to the next pair. All right, so this one's for all my friends that trade euro dollar. Got a lot of people that follow euro dollar on different time frames, so I'll pretty much touch on this one most likely every week. So that being said, what's going on here? Well, you can see that the daily's been trading below ATS trend for a good while now, had a lot of opportunity. Pretty much every single time you get a new value line or a new expansion line and trade above these levels, you're coming right back to center of gravity over and over and over again. Until this trend changes, they're all coming back. So how do we navigate into that? Well, we look for a new relevant framework, which is right here. And we look for associated framework that's close to it, because these boxes form families of framework and they all work together to tell a story. So if you're not running ATS software, there's two different value points that you want to take note of. You probably want to write these prices down. One is going to be right here. This is 1.08081 roughly. And then this one up here is 1.08498. Roughly. So these are the two benchmark value prices that I would be looking to work with within this week. Now, this has had a pretty good run to the downside. Where if you look at my previous week's videos, I've touched on this. We fulfilled what I thought was going to happen. And so now it's just a question of how far is it going to keep going. I do think that there's a good possibility that we come back to the center of this minor framework here. A lot of beliefs to the long side were born right here. So I think that all the people that were holding their positions and haven't taken profit, obviously they've taken a big hit if they didn't take the profit out of the market, which a lot of them didn't. But it's just eking back towards their pain threshold. That pain threshold is really going to start right here about this level. Right here where we had this new trend that started. That origination point, you can see we also have a bullish institutional level where the institutions kicked that off. They would love to drive price right into this level and potentially even down through this low down here, because a lot of liquidity would be forced into the market through all those traders' beliefs breaking. I don't even care if they're running a stop loss or not. If you were in the money or you bought anywhere up this and price gets below this threshold price, they're going to feel uncomfortable, and that's going to cause a lot of selling. And the counter to that selling is buying liquidity for the institutions. So that would be where I think there's a good possibility we could run through there, but nothing's for sure. You need to trade safe. You need to have good places to enter, strong entry points that you could effectively monitor your risk from. So that comes back to these two levels I'm talking about. Now, if you look at right here, we have a pretty clean master pattern that's going on. You can see the numbers here with our institutional mode turned on. Here's leg 1, 2, 3, 4, 5, and this came down into a 6th leg down here. Now, the more legs that we get around a price point shows that there is more gravity to that level. That's a significant level for the market makers. So we really want to pay attention to that. That being said, yes, we are trading above value right now. We're going into the close of the session. But personally, I'm not telling you what to do, but I would be careful that if we don't hold tightly around this value, that there's a good chance that we could whip up to liquidity at this swing high point. And the reason again for that is because there has been so many expansion legs established around that central point, pointing back to that particular contraction, that there's a good chance we're going to go back there again. So if we do, I'm not telling you to trade it up long, but ideally I would look for strong entry points above this price level and maybe even at this liquidity line level up here. That would be a great spot to try to enter into the downtrend, and even if it reverses, it'll be probably pretty kind to you from a risk management standpoint and put you into the money, even if we're totally wrong about the trend. That's the whole entire point of trading above or below value in trend, is because it lets you off the bus when you're wrong. It's so important to wait till you get those prices. A lot of people are going to chase these moves down here, especially when you come through lows. You do not want to do that. That is a wrong thing to do. We want to trade on the pivot point of value, true value, where there's been a balance of supply and demand. And we know that from our contraction boxes. So as we trade back up through that level, if it happens, doesn't have to happen, but that'd be a great place to start up through liquidity here. And if we do get up through liquidity, I would not want to see price trade for total risk up through these two levels up here, maybe into this range in between. But I definitely don't want to reach for this liquidity. If we pull up our sync crosshair, we look up here, you could see where I'm putting this liquidity on that liquidity line level up there at that swing high point. And look how far above it is on ATS trend over there. So realistically, that's way too high to be trading over ATS trend for my comfortability. So I definitely, this whole idea is really consolidated in this range here. Let's just take a brief look. Even this liquidity is going to be above ATS trend, as you can see here right now too. So that's another thing you're going to want to be careful of. You don't want to get too high above that line, and if it trades up through that line, you want to see it trade back below relatively quickly, just like it did up through here. You can see we did trade above it, but you don't really want candle bodies closing above that line. So you combine the two, it's given us a very clear directional bias, but we still need to reach for that discounted entry where we have a strong positioning to at least come back to value, put you in the money, and give you choices. Do not chase the trend. It never works out over time. So that's it. And if we do push, where's our potential profit targets? Well, we got a great order block projection down here based off this origination point, which is, I think, the most predominant one. So I think that we could work to that level down there still. And then I'm also, again, looking at the daily to push down to the center of this box here. There's about 83 pips from where we're positioned now. And if we get positioned up around the top of that liquidity on the last cycle, there is like 150 pips or so from that point up in this range over here. So that's what I got for you this week. So hopefully you enjoyed, and remember, trade your own plan. These are just ideas. These are things for you to work and monitor, but make sure you have a very clear plan of how you're going to execute if you do get in. And hopefully this will help you with that. So until next week, thanks so much for joining. If you like what I do here, remember to like and subscribe, and that way you can get notified every time I do one of these videos and the other videos I put out as well. So take care.